Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Seiwan, Professor of Economics at Ewha Women's University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
So the Bank of Korea just today decided to keep its key interest rate where it is at 1.25%. There had been speculation, of course, that it might cut because of the economic impact of the coronavirus outbreak. What's the significance of an interest rate freeze at this point?
Bank of Korea has kept its policy rate steady at current 1.25% in the middle of growing economic fallouts from coronavirus outbreak. As you said previously, some financial market participants expected interest rate cut by central bank because coronavirus impact on the economy is becoming more serious. However, it looks that Bank of Korea believes that this is not the time of action. Instead, as of now, Bank of Korea is only watching how much coronavirus outbreak is affecting Korean economy. Also, central bank is worrying about lower interest rate causes another bubbles in housing market and more depreciation of Korean won.
Yeah, a lot of factors clearly pulling in different directions there in that decision. But speaking of dealing with the virus, the government's looking to set up an extra budget to support the economy. Some saying it'll be worth 10 trillion won or more. What do you make of this idea, and what do you expect will happen?
It is said that the government and ruling party together are designing over 10 trillion won supplementary budget. For reference, in 2015's MERS outbreak, the supplementary budget was about 11.6 trillion won. And under these circumstances, it is necessary to draw up a supplementary budget because the fallouts of domestic consumption and investment. It means that the only part that can support the economy is government's expenditure. Also, supplementary budget is essential for providing appropriate resources to coronavirus-infected people and regions.
Well, looking at other parts of the markets, U.S. stocks were mostly down again on Wednesday. It's been a rough week or two because of the coronavirus outbreak. What's the story on Wall Street?
New York stock market was pretty mixed yesterday. Some positive views are kind of neutralized by increasing concerns on coronavirus spread in the United States. Dow Jones Industrial decreased by 46 basis points, but NASDAQ increased by 17 basis points. Major European markets slightly increased, except German market yesterday.
Yeah, and here it's been, of course, a wild ride in Korean stocks as well. Today they're down a fair bit again. They've gotten slammed in the past couple of weeks. Tell us about that.
Domestic stock market is still heavily pressed by coronavirus outbreak concerns. Rapidly and continuously increasing number of infected people gave negative impact on domestic market and real sector too. Today, Kospi dropped by 1.05% and Kosdaq decreased by 2.51%. So these numbers are huge numbers in a single day's movements. Foreign investment and domestic institutional investors sold stock today. And today, Japanese stock market also decreased over 2.15% in a single day.
Well, now, back here in Korea, we have business sentiment, numbers showing that it's fallen among Korean companies by the biggest amount on record because of the coronavirus. We know that it's really hurting small business. How has this affected different sectors in particular, and what else is in the Bank of Korea's report for February?
According to recent business sentiment survey, February's business sentiment index decreased down to 78 level which is the lowest level in 11 years. The general way of interpreting business sentiment index is when it is lower than 100, that is negative sign. So this low business sentiment is affected by, of course, coronavirus outbreak. The most affected businesses are, as we expect, travel and transportation and automobile and petrochemical industries. So recently also released Bank of Korea's consumer sentiment dropped in a larger scale. So we can say that both of the consumers and manufacturers are suffering from coronavirus outbreak.
And things seem to be turning around there, a couple of months ago. And this is just out of the blue. This virus has sort of put a major dent in all that. But Professor Kim, always a pleasure to have you on. Thanks so much for sharing your insights.
Thank you very much.